Hello traders, the time in London is 42 minutes past 2 p.m. Okay, that's 9:42 Eastern time. New York is now open. London is still open. And this video is about bearish force part 2. In this video, we will talk about fundamental bearish force. The previous video that we titled bearish force part 1, okay, we were talking about technical bearish force, looking at the monthly charts of Cisco, Epic CSCO, Charlie Sierra, Charlie Oscar, okay, and we were talking about a technical bearish force, how we can recognize the beginning or the starting point of a bearish force, so we can trade in the direction of the bearish force. When a bearish force is activated, okay, we must manage the trend, adhere to the 5% management rules without cutting corner. It does not matter whether we are day traders, swing traders, or position traders. The importance, okay, of the bearish force, okay, is no one can disregard it. Very important, okay. We will go now to, I invite you, okay, to follow me, okay, if you want to go to www.googlefinance.com, where I explained to you before that it's very, very important that we combine the technical and the fundamental. The investors, okay, which are the shareholders, they are not speculators, they hold the share of a company, and if the business is not making money, if the fundamentals are not sound, these investors will take their money. Some of my favorite, okay, videos on YouTube are videos about The Apprentice. Okay, you can check it. The Apprentice. It's about okay, investment issues, okay, business issue. And another one is the Dragon Den, okay, or the Sharks. These are some of my favorites, okay, videos on YouTube. And you watch these investors, these millionaires, always they want to invest. They will talk about risk, or the risk-reward ratio. Is it worthy, the risk? If it's too much risk, they will pull out. Okay, they will say, okay, I'm out. Okay, that's the word they will say, I'm out. Or if the fundamentals are sound, they will say, I'm out. Or if the valuation is too high, the PE ratio is too high, okay, they will say I'm out, which means the company is too expensive and offer, okay, less quality, and they will say I'm out. Or sometimes it may be the business is excellent but the risk is too high, they will say I'm out. Or okay, the owner of the business, okay, is not, okay, reliable, they can't trust this owner of the business, they will be out. Talking about the quality of the workforce, okay, the directors, the executive, and the employee, okay, their competence, okay, they will say I'm out. Sometimes they will look at the competition and say anybody can copy your business model, and they will say I'm out. As a trader also, or what we see on the chart here is all about a business, investors, speculators, traders, position traders, market makers activity summarized by the price itself, the number one indicator right here. But we are looking at the chart, okay. Sometimes you are looking on the chart, you may fail, okay, to see something, okay, because there are some information that you can see, okay, when you look at the balance sheet, where the price cannot tell you straight away, but it's building, okay. The price will reveal to you what is taking place, okay. But sometimes it's very important to see the bigger picture, which means you see all the time frame, monthly chart, weekly chart, daily chart, whichever you want to check. Use the multiple time frame trading, use your technical analysis. But at the end of the day, okay, at the end of the day, so to speak, okay, you are about, okay, to look at the fundamental and know exactly what kind of business is this one, okay. Are they making money, okay? Are they dynamic bullish financial instrument or not? That's where you go to, okay, Google Finance. We put the Epic here. You see Google Finance top here. You put the Epic CSCO. You click on get quotes. Easy. As I always say to traders, so they can remember, your heart. Where is your heart? On your left hand side. It's on your left hand side. You look on the left hand side of this Google Finance right here. It's all here. You have news at the top talking about inside of the trading triangle, the leaders, the news, and the fundamentals. The news at the top. Okay, You want to know the news? Click on the news. Okay, related company, historical price, financial. I'm more interested into the financial. I click on financial. Okay, let's click on it. Boom. Okay, it's coming up. Here it is, financial. 3 session, income statement, balance sheet, cash flow. I'm more interested in the balance sheet and the cash flow. Now, what as I explained to you before, we can look at it at the quarterly data. This is what we are seeing now. This is the quarterly data. If you haven't watched the video that we talked about Google Finance, go to www.youtube.com and click on Google Finance at www.youtube.com/George Trio. Check that video that we titled Google Finance. And we want to look at the annual data. Okay, I want to look on the annual data. This is Cisco. I want to look on the annual data. Okay, just 1 second, please. I want to check something, ladies and gentlemen. Okay, now that's fine. Okay, now what's happening here, ladies and gentlemen? This is the balance sheet of Cisco, and we are looking on the annual data from the year 2007 to 2000. Okay, you can see here to 2008, 2000, okay, and 9, 2010, 2011, right here. As I explained to you before, I want to go very fast in this video. 1 second, please. I want to check something. Okay, moment, please. I'm still here. Okay, don't worry. Okay, just to do something very fast. Okay, now let's move on, ladies and gentlemen. Now we're looking on the first thing that we want to pay attention to the total current asset. As I explained to you, I will explain to you another video that I call financial. Okay, it's also already on YouTube, and right here we can see 30 in millions of dollars. Okay, so right here, okay, 35.699. okay, 35. Look at the first 2 numbers here, 35. Don't pay attention to the rest. 35 here, okay, thousand, that's 35 billion. Okay, 44 billion. Okay, 51 billion, 57 billion. So the current asset, the total current asset for Cisco is increasing since 2008 to 2011. As I explained to you before, looking at the graph here, the blue one, the bigger blue one here, this blue one. Okay, this is the total asset. You see, it's going up. Yes or no? It's going up. Okay, it's going up. Okay, now I don't want to dwell too long on this chart. Okay, I want to move on fast, and we're going to compare the current asset to the current liability. If a company, this is the acid test, if a company cannot pay their short-term debt, okay, they're going to be under pressure and they are likely to suffer. The investor will pull their money out as soon as possible before it is too late. The same thing happened to the Lehman Brothers and also the bank in Brussels recently. Short-term liquidity, okay, is not good. You must have asset that you can transform quickly into liquidity, into cash. Either you have cash or you have enough asset that you can convert quickly into liquidity to meet your current liability. So we're comparing the current asset to the current liability. As a day trader, swing trader, position trader, we are more concerned about the short term and medium term. Now look at it. Okay, so we see that the current asset is increasing, as I show you here. You see 58. Okay, we are on the yearly chart. Okay, we're talking about the current asset. We are 35 here, 35, 44, 51, 57 billion is increasing. Now current liability right here below, follow my cursor here, 13 billion compared to the 35. They have enough room to survive. That's why we are seeing here. Okay, next year 13 billion again, not too bad. Okay, they can survive 13 billion compared to the 44 current asset. It's not big debt, they can handle that. They have enough room to breathe. 51 billion current asset, 90 billion current liabilities, not too bad, they will survive. 57 billion current asset, 70 billion, okay, current liability, they will survive. So far nothing is giving cause for concern. Okay, looking at doing this kind of simple, okay, acid test, so to speak. Okay, now we go to the cash flow, ladies and gentlemen. That's why it's so important to check the balance sheet and the cash flow. As a short-term and medium-term investor, look at the cash flow. This is where the problem is. If the company is not making money, where does he going to get the money from? Talking about competition, okay, in the sector, talking about the global macroeconomic condition. you are not making money. That's a serious issue. The investor does not like that. They don't like that. The investor do not like that. Okay, so right here, looking at this chart, we want to look for cash from operating activity, the core activity of the business, not other investment, core activity. I want you to discount also the depreciation, but I don't want to go deeply into the depreciation. These are not core. This is not cash from selling something, but a part of this figure here, we may discount the depreciation figures out of these figures here. So talking about cash flow from operating activity in the year 2008, we can see 12 billion. Okay, that's cash from operating activity. Following year 2009, it dropped down to 9 billion. They are under pressure. What's going on? Why now 12 billion, we come down to 9 billion. Following year, they increased to 10 billion. Okay, a bit of improvement. Following year, they stop again at 10 billion. So 12 billion, 9 billion, 10 billion, 10 billion. There was a bit of problem here, as you can see. As we were looking on the chart, now you understand why a lot of traders were busy selling the Cisco. The fundamental were not, the cash was not coming in. It may be excellent business, but the cash was not coming in. 2008, it dropped to 9 billion, and then it came to 10 and 10. That's what people were selling. Now you see it. Now you see. So when you see that now the cash flow is decreasing, and also the chart is giving us signal to sell, a bearish force is activated. Is activated in 2009, in 2008 right here, and we go at that point in time checking the financial, and we see that in 2009 same story. In fact, the bearish information given by the price in 2008 was confirmed again on the fundamentals in 2009, when we see that there is a decrease in the cash flow. So we are more confident now. If we see a bearish signal here, as you can see, this trend line was broken and retested. In fact, this support level was broken, retested. A bearish for that was activated here, was just excellent signal to sell. In fact, in 2009, because the market was going up, Cisco also benefited from that. This is about the trading triangle. But in fact, in 2010, people sold it again after this quick retracement, paying attention to the price and also the fundamental, the balance sheet, and the cash flow. Now there is another thing I want you to pay attention here, looking at the cash flow, the net change in cash. The net change in cash. Now you can see there was 1 billion here, 1 billion something. Pay attention to the first figure, 1 billion something, and then we dropped down to 527 million each, and then they went into loss, minus 1 billion 137. Ladies and gentlemen, the fundamentals are revealing a lot here. So in 2010, in fact, they make a loss of more than 1 billion. Can you see that? It's right here, red. You see the color? It's red. When you see the red, it's minus, red. So you don't miss it. That's why Google put it here in red. In case you forget to see the minus sign, at least you know it's red now. You see? They went into red. So 1 billion, they dropped to more than 50% drop. From 1 billion something, they went to 527 million. Then they go directly into 1 billion something loss. Looks the reflection of the price, down, down, down. Down. They just sell it. You see? Now you understand why this stock, since 2008 was just kaput down. Kaput down. This on a monthly chart though, down. Those who were on a daily chart, let's go on a daily chart quickly, and you see it's a messy time for this stock, and those who were buying were not enjoying themselves, but those who were selling Cisco were enjoying themselves, because now the fundamentals and the technical were in harmony, and people were just selling. Any movement to the upside was giving the sellers the opportunity to sell, and they were quite happy to sell Cisco, and everybody was selling Cisco. Going back again to the fundamental, we can clearly see that it's about Cisco. Looking at the annual data of the cash flow. I don't want to go now to the quarterly data. We'll go back to that soon. The cash flow, you can see the annual data. So though we didn't see anything on the balance sheet that to give us cause for concern on the quarterly, on the balance sheets, everything looks okay on the balance sheet. But when we went to the cash flow, we see that they were not making money. And this is where we know straight away, as we see, okay, a drop in the cash flow in the following year. At this point in time, a fundamental bearish force was activated. The cash, they say is the king. I say God is the king. But in business, cash is too important. As the company is not making money, the investor will pull their money out unless they are not under a competition pressure. They will allow them, okay, to sort themselves out and put their house in order, okay, and resume normal business activity. But if the competition is tough and the company is not making money and the macroeconomic condition in the world is not also good, talking about the general world economy, the investor will put their money out. This is about a bearish force. Looking at Cisco, okay, talking about okay, the fundamental, okay, looking at the balance sheet, looking at the quarterly data and the cash flow, one must go to Google Finance, type in the EPIC, and go to the left hand side, click on the financial, and check the balance sheet and the cash flow. As one can see here, the key element we want to pay attention to on the cash flow is the cash from operating activity and also the net change in cash. Ladies and gentlemen, there are more to this, and we cannot cover all this in this video, but I believe that we have said the most important thing, that you can also use a simple tool that you can use to determine or to recognize when a fundamental bearish force is activated. When one is looking at the cash flow from operating activity, one can subtract, okay, the depreciation figures. As you can see here, you can see that depreciation is increasing 1.7, 1.7, 2, 1.7 billion, 1.7 billion, 2 billion, 2.4 billion is increasing. We can deduct that from the, okay, the cash from operating activity to reflect the reality of the core business of Cisco. At this point in time, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell Cisco. This company is improving. As you can see, the figures, they went from 1 billion loss, 1 billion in net cash. Now they have a 3 billion in net cash. There's improvement here from minus 1 billion. They went to plus 3 billion in net change in cash. And also you can see that since this drop, they maintain their position. There's a stability here. So one must go now and check the news regarding this. Okay, click on news and check the news regarding Cisco. Okay, use the trading triangle and also the trading tools. Okay, thank you for watching. Okay, and we will speak to you very soon. This is about a bearish force, part 2, looking at Cisco, looking at the balance sheet and the cash flow. Thank you for watching, and we will speak to you very soon. We are the TSTWSYS 008 traders.